in now or after the live. I greatly appreciate each and every one of you. Please make sure to hit that like button so we can help push this midday market report through the algorithm and through the analytics. It'll force YouTube to help push this through the overall sphere of YouTube. I want to thank everybody who continues to support this channel, as it does mean a lot to me. I want to get through the market report here in a timely fashion, and then I will get you on your way. So if you do tune in now or after, please take a moment just to hit that like button, as it is an integral part of what we do here, and it will allow us to expand this market report. So the Dow Jones is up 251 points right now, or 0.74%, on the heels of the dollar dropping over $1.08 on the US dollar, down 1.02%. It's put a lot of risk assets, metals, commodities. It's given it a chance to maybe move up here a little bit. So we'll see how this exactly plays out in the time going forward here. But this is definitely interesting, to say the least. The fact that we failed to break above that 107.30 on the last push up told us that we were probably topping out. And now we need to see exactly what the results are. Nick, good afternoon. Welcome in. So with the Dow Jones, what we managed to do is put in a W reversal here. We talked about our pivot point in the broadening wedge to see if we could come back down to the bottom of the broadening wedge, but we have to break this pivot level, and I'll show you once it loads. Should be momentarily. I don't know why it's taking so long. That's taking an extremely long time to load my chart up. DXY, let's see what's going on here. Everything's taking forever. Peter, welcome in. Thank you so much for tuning in. I greatly appreciate it. Hopefully you're having a good day. Mick, welcome in. Crypto Bob, hey Tom, love the market. Yo, up and down, down and up, all getting very interesting. Thanks for your dedication. Always a pleasure, buddy. Hey, I appreciate that greatly. So here's the Dow Jones. We're in that broadening wedge, but we managed to bounce off the pivot level at 32,580, which could be our stopping point. We've already had 2 hits on support and resistance on the broadening wedge, so we've already confirmed the pattern. Now it's a matter, do we break out or down? Well, as of right now, one could still say this is a bull flag trying to play true. If we can stay on top of 33,900, although it's a broadening wedge, we need to get up. And our big move would be around 36,000 to try to get on top of. We failed to break the pivot point at 32,580 to warrant a move down to 31,000. And now we go appropriately. Now we're going to try to invalidate that death cross. And maybe it's just a few days, maybe a week behind cryptocurrencies now. True, welcome in. I'm so glad to see you in here, my friend. I really appreciate it. The consistency, the timing. DXY is down $1.08, or 1.02% to 105.07. It briefly went below 105. Right now we've got that mid pivot point at 104.72 to see if we're going to continue to break down. It looks like we're falling very bearish here now. About to have a death cross in the 4-hourly. When we made this last push back up, we talked about we needed to come all the way back up here to what was 107.30 back here, and then it would have had to come to 107.60 area, but it failed wholeheartedly. It failed this W reversal reverse, and it unfortunately, or fortunately, depending on how you look at it, ended up being a topping pattern that we talked about if it couldn't come back up. And now our next line is 104.72, and I think it's just going to go in a very quick rotation here now. Now that the U.S. government admitted that they don't care about raising the dollar up to 109 this year, and I'll tell you how they admitted that. By asking for $1 trillion and then doing what simultaneously? And before I tell you what they're doing simultaneously, to confirm that they don't care about the dollar going to 109 by end of year, and that this topped out likely now, we're probably going to come down here to the 200 at 104.13 to see if that's true. But in the meantime, what they did was they bought up the U.S. 10-year. It's down 2.17%, or another 10 basis points. Remember, it just was right around 5 basis points, 5%. Or it was right around 5%. So, I mean, we've lost 44 basis points here in a very short order. So, I mean, I know none of us are buying the government bonds, but that's exactly why we said at the top of this cup we'd have this consolidation to see whether we hit one of 2 layers, whether we come to 4.29%, or if we have a grand scale retracement all the way back down to 3.9%. I just don't see it getting much below this 4 point. I suppose you'd come to like 4.2, but that's why I put this retracement here, because it just didn't seem like, something doesn't seem right. That's what I keep saying. It doesn't seem like they're just letting everything run unopposed here. It looks like they're going to buy these bonds back up. And while they're buying the bonds, the interest rates come down, because when there's interest in it, it's not going to be paying out as big of a yield. When nobody wants it, they're going to have to offer a bigger yield to get some money to be put in. But when the government's pouring it in off of the backs of printing more money, and it's going to cost each and every one of us even more money in taxes. Remember, the government's all about beating the smallest person in the food chain, the one who they think can least defend themselves, and unfortunately that's the citizens. And unfortunately that's the raw truth we all have to deal with. So while they're doing that, simultaneously dropping the dollar and buying up government bonds, that's a recipe for metals to explode here in the short term. Assuming it lets it play out truthfully, you see the gold silver ratios come down about $1.32 at 85.876. But I mean, very well, we could be going into a time where if the dollar continues to move and we do break out of these areas, the gold silver ratio could come back down to this uptrending support down here at 82.4. And the reason for that is silver could start moving here faster than gold. Let's focus on gold first. So, hey, JW, welcome in the happy birthday, JW. If you guys are interested, tonight at about 6:45 p.m. Eastern Standard Time, I'm going to be doing my birthday show. It'll be the normal live, except I'm going to do it in a different way. We might have a birthday shot for JW, but it's his birthday today, so make sure you wish him a happy birthday if you're in here right now. As we have 37 people in here for the market report, I greatly appreciate that. So hopefully you're having a blessed day, JW. But with gold right now, Peter Pan welcome, or Peter from Dubai, or Peter Dubai welcome in. Right now you're looking at the time on silver, so this is the last time to buy. I didn't say it's the last time to buy silver. You have to watch it. There's never a last time to buy silver. Silver is always a store of value, but right now, if these, like right now, gold has an inverted hammer candle here in the daily time frame, and if this does work up, if we break 2009 here, this is starting to look like we might fall a little more bullish here still. We have a golden cross in the daily time frame, and we're starting to I appreciate everybody saying happy birthday. Looking for cheaper price, John? I mean, that's if the US dollar ends up coming parabolically down, you might not get that chance, but never say never. So right now what we're looking for is on this golden cross here in the daily is for gold to break 2009 and then ultimately push up. We've already hit our technical target so far. And Darren, welcome in, mate. So glad to see you in here. So glad. And we would be moving up towards 2075 on this next move if we can get on top and verify this. Likely we'll come up to about 2130 and try to contend up here, or 2100. That's where I think we're heading towards, assuming we can stay on top of this uptrending resistance that we're now using as support, because that's a very big signal whether this is going to stay bullish or bearish. ACH isn't clearing direct deposit. There's a liquidity crisis, but no one. Yep. Oh yeah. Oh, there's a huge liquidity crisis. A lot of things aren't going right. A lot of things are going to be coming out. It's all on the government here. They've let us out to dry. Silver, $23.19, up 44 cents an ounce to 1.96%, up to $23.20 an ounce. This looks like a bull flag to me. That's forming a V-shaped recovery inside of a formation that we could have had a 75% chance to break down, and we took the 25% route back up and are using it as support structure. We're trying to invalidate this bearish movement in silver, and if we pull up here, we should be looking in the short term to about 24.35, assuming, and this is a big assumption here, we don't ultimately lose $22.36. That's the caveat here. You lose that area while you're falling a little bearish, and you might either come for a W reversal, or you could just continue that down to 18 bucks. But as of right now, with what's going on, I wouldn't put a lot of stock in the fact that we're going to just go down guaranteed. If the dollar does continue to decline here, like it looks like, because it is all but reversed down, and it's a catastrophe now. You could see $1 or $2 decline day after day if this is for real. And we're getting very close to 24, so this is when it becomes danger. B2 gold, the last one I'll cover, and then we'll get into a little of the other. We talked about the last couple of days how I had to buy into B2 gold on this structure. I bought some at $3.18, and then I also bought some more at $3.21 for a total right now of $4,200. So I've got $4,200 in B2 gold right now, and I've been very transparent. It's about $3.21 right now. So yeah, I put myself on the hook here just because it looks like we put in this inverted head and shoulders. It looks like we have this V-shaped recovery with the bullish handle, and we came back up within this formation. There was two options here. One, it would go down to 240, Or the second option, it would just recover very quickly, and now we're going to ride up about 25% if this plays true. So we'll see what happens, but I'm in this for the longer game. So whether it goes up or down, I'll just keep adding to it, unless I see a spot where I'm like, you know what? If we lose like $3.11, I suppose, maybe it could come down, but I'm not in this for the short game, so we're going to see what happens here. But with what's going on with gold, what's going on with silver, and what's going on with the US dollar, I decided to put in to B2 gold when it was closer to 107, the US dollar, and belief that if they did not raise interest rates here again, that they're going to full on start printing money. They asked for $1 trillion, now they're depleting the 10-year, so they've completely forced it to crash here. So, and all they're doing is buying up the government bonds, which in the future, all they're really doing is ushering a higher level of hyperinflation, because now it's being futured into the mortgage or future 10 years down the road, 30 years down the road. Another thing nobody talks about is Janet Yellen should be fired because she was buying the 10-year or the 30-year, and she could have been getting the 10-year for a substantial higher percentage yield in the last several years. And she mortgaged our future on the 30-year. Hello. How are you? Thank you very much. Have a good day. But she mortgaged our future here. And now she's getting lower yield rates over 30 years instead of taking advantage of higher yields on the 10-year. I mean, it's a debacle that nobody talks about. And then last but not least here, before I let you guys go, stock market news today. Stocks rise as jobs growth cools more than expected. Henry, sorry, just got here. Did not see someone else. Yeah, there's been a lot of ACH issues across the U.S. Tons of them. Deposits aren't being received in banks. Yada, yada, yada. There's a lot of stuff going on right now. Stock market news today. Stocks rise as jobs growth cool more than expected. I guess we could, no, I don't want to, I'll just read this. Stocks jumped on Friday afternoon as investors wait a cooling in jobs growth that could reinforce hopes that the Federal Reserve is done with its rate hike campaign. The Dow Jones Industrial Average rose 0.7% or nearly 250 points, while the S&P added 1%. The tech-heavy NASDAQ composite gained roughly 1.2%. The U.S. economy added 150,000 jobs in October, undershooting the 180,000 reading expected. With auto industry strikes a factor, the Bureau of Labor Statistics said the unemployment rate ticked higher to 3.9%. The health of the labor market is a key input for Fed policymakers. FTX dude got found guilty on all 7 charges. Shocker. That's one that, I didn't watch a single second of it because I knew exactly how that was going to play out. But the reason I didn't watch it is because the very ones who are putting the sentences in, and the very ones who brought up charges, and the very ones who are residing over the cases are the same ones who took money from them to get into those positions, which is the ultimate karma. Just look it up. Look in the last election. Look in the last for your circuit courts and everything. He single-handedly paid them to get into their positions, and now they prosecuted them because you have to beat a dead horse. See? That's what they do. They take your money, whether it's fraud or not, but this is stuff we can't talk about, so let's continue on. The health of labor market is a key input for Fed policymakers, and the signs of a slowing economy should support the case for the central bank to hold off from another rate hike this year. Tech stocks were recouping losses earlier in the morning after disappointing results from Apple, while Apple's earnings beat estimates in its quarterly report. After the bell, the iPhone maker was cautious in its outlook for growth, saying it expects sales of iPads and wearables to decelerate significantly. Well, you know how that happens, everybody. You know how that happens you know what that happens. No one can buy this because they don't have any money. But the second reason why is everybody's starting to realize, just like Activision, the fans of Call of Duty, they realize they're getting the same garbage game year after year. Same thing with the fans of Destiny. They realize their devs are giving them the same garbage trash year over year. Same thing with what's going on with Apple and the iPads and the iPhones. They realize you can't use it with third parties, so now they're switching to the Samsungs. Since Apple already admits they use 75% from Samsung, you might as well buy it from the source, pay a little bit less and get a better product. You can't use still to this day third-party apps on iPhone or Apple. The fact everybody still buys it with just that fact alone in a business world is crazy. Oh yeah, he is. You better believe it, MGR. Exactly. No, JW, I get you. That's all I can say. This is all I say. You see, I know when to back off. Here are some of the stocks leading Yahoo. Finance is trending. Let's see. NIO, that's an electric vehicle maker that I used to be invested in until they completely had a bunch of oversight, and they had priced over earnings by about 125 times, and I decided to get out, and I was right on the money with this one. The Chinese electric maker rose 5% Friday, and this was years ago, after the company said it plans to cut its workforce by 10% in an effort to boost efficiency and reduce costs as it faces growing competition. Apple shares of the iPhone maker fell by 1% after quarterly earnings beat estimates, but executives forecasted a cautious outlook for growth, saying it expects sales of iPads and wearables to decelerate significantly. Coinbase, the country's largest crypto exchange, posted its 7th consecutive quarterly loss as its trading volume and the number of people trading on its platform fell, sending shares down a volatile path from Friday. During afternoon trading, the stock was up 1% as investors embraces a $2 million loss in the third quarter that beat Wall Street expectations. DraftKings shares rose by more than 15% as they continue to nickel and dime the poorest of the poor who decide to gamble through sites like FanDuel and DraftKings and any of these other ones that, as you see, have now invaded. Whether you're watching a cartoon, whether you're trading stocks, whether you're watching a football, it's invaded. They've brought Vegas to your house. When years ago you at least had the privacy within your own house, not to have to deal with the gambling and all that shit. Now they brought it to your front door. So if you're an overzealous gambler and things like that, good luck, because they've literally brought it to your doorstep and there's not a damn thing we can do about it now. Wall Street kept up the positive momentum during afternoon trading on Friday as fresh data bolstered the case for an end to the Fed's tightening campaign. The S&P 500 gained 1.2%, while the Dow Jones Industrial Average increased 0.8% or nearly 300 points. The tech-heavy NASDAQ Composite rose 1.4%. And last but not least, I wanted to get to the stocks rise and 10-year Treasury yields retreat. Make sure that like button before I leave. It would greatly help push this content. I appreciate everybody who stayed until the end. Stocks jumped and the yield on 10-year government bonds fell on Friday as investors digested new jobs data that showed slowing growth, an indicator that is closely watched by officials at the Federal Reserve, and one that suggests a pause on additional rate hikes. Chair Powell acknowledged in a press conference on Wednesday that some slowing in the market will likely be required for inflation to continue its downward trajectory. Non-farm payroll growth totaled 150,000 in October. Data from the Bureau of Labor Statistics showed while the unemployment rate rose to 3.9% from 3.8%, the unemployment rate now stands at its highest level since January of 2022. The S&P 500 rose nearly 1% Friday heading into the afternoon trading session alongside gains for the major indexes. Yields on the 10-year fell to 4.539%, down 12 basis points and off its recent peak of 5%. And another sign that the market anticipates the Fed is done with raising rates. On Friday, markets were pricing in a 95% chance the Fed doesn't raise rates at its next meeting, according to the CME FedWatch tool, up about 15% from a day prior. And as we know, there's one more potential rate hike before the new year. Have a blessed afternoon, everybody, and hopefully I will see you.